Welcome to Zen and the Art of Real Estate Investing, one of the fastest growing real estate investing podcasts in the world. What if you could learn from experienced real estate investors? Find out what got them to where they are now. Get insight into their daily habits and take these insights to inspire your own growth. Each episode, Jonathan Green shares an in-depth look at the mindful approach to real estate investing. Jonathan is a lifelong real estate investor and the founder of Streamline, a data-driven, investor-friendly, independent real estate brokerage located in Madison, New Jersey. Whether you're looking to start from scratch, get to the next level, or just for a straightforward and honest approach to real estate investing, this is the free mentorship program you can take with you anywhere. Now, here's Jonathan.
Welcome back to another episode of Zen and the Art of Real Estate Investing. My guest today is Tim Woodbridge of WCG Investments. We're talking mobile home park syndications, simple, stable, and done for you, cash flow without managing tenants, toilets, or timelines. But Tim's been in a lot of asset classes and has deep points of view on all of real estate, and we get into it right now. This is episode 291 of Zen and the Art of Real Estate Investing with my guest, Tim Woodbridge. Tim is the co-founder of WCG Investments. What do they do? We're talking mobile home parks. Tim purchased his first one in 2019, and now he owns at least, and I say at least because sometimes these bios are a little bit late, 15 mobile home parks totaling 544 pads, 34-unit apartment complex, and a 26-space RV park. Tim, welcome to the show.
Thank you so much for having me. And you're right. So let's see, we're at 19 parks, 670 units, sold the apartment and still have the RV park.
Oh, okay. Yeah, that's why I always say, I know I'm going to be close. Yeah. So, I mean, I know you didn't start in real estate. I know you started in nursing, but what drew you to real estate just in the absolute beginning?
Yeah, man. I mean, it's the same as everyone else. You know, what I've learned the more I do this, there's no secret. It's just everyone has a very similar story, it seems to me. So I read Rich Dad, Poor Dad, and, you know, coming up, like asset liability, those were new terms to me. And I know in the book, they're very, loosely defined, but simple. And I was like, oh, okay. So that's how rich people get rich. And so it just led me down the rabbit hole to, okay, well, real estate, what else can I read and what else can I listen to? And then, from there, that brought me to Bigger Pockets. And Brandon was interviewing Frank Rolfe, who I met recently and was on his podcast too. So it's fun how things come full circle. But they were talking about mobile home parks, and there's just something that excited me about it. And I just went for it. And that was, 5.5 years ago.
Yeah, awesome. And one other just side note on Rich Dad, Poor Dad, for me, I had been investing my whole life. But when I read the book as an adult, maybe for the second time, the leverage part really started to make sense, because I grew up with a dad who was a cash investor and I was a cash investor. I was almost like thinking leverage was scary. And then all of a sudden, the way that it was described in there, as you were saying with the other things, I was kind of like, I mean, that makes sense. There's good leverage and bad leverage. And especially when you get into these large asset classes, you have to have some type of leverage.
Yeah. I really like that, in that, it's definitely, it's a tool, it's like a lot of things. It's neither good nor bad. It's how you use it. And so, I mean, I love it in that, we're very conservative. We don't over leverage. We make sure that there's a decent amount of buffer. And, all of the banks that we have, like, we treat them like our partners, because they are our partners, right? They're putting the majority of the money into something. So I know that if I get the good to go from them, then it's just another thing that says, okay, this deal is good. If they say no, or like, we're only going to give you 50% leverage, then I'm like, oh, I need to really look at this. I'm probably overpaying.
Yeah, that's a good point, though. And I love that you termed it a partnership, because I feel like almost everything in real estate is really a true partnership. So you can look for a win-win. but I don't think everybody in the beginning looks at it like that, because it does take a while to grow, I guess, the partnership into a way where, hey, now you have 19 parks. So when you come to your traditional lender, you guys are already well past the getting to know each other phase, so you can move and have a little bit of bounce back. But it was tougher in the beginning. In terms of partnerships, what was it like when you were getting started to try to, find those partnerships? Because it's harder. Nobody knows you and you don't have the experience.
It is harder at first. And like anyone who's relatively new, just accept that it's harder, and that's okay. That's not you. That's just how it is.
Yeah.
So yeah, I found this deal on mobilehomeparkstore.com, and for sale by owner sort of thing. Got it under contract, and then I was like, oh shoot, like what now? And so I turned to people who I already knew from RIAs, and that's really how I formed my first partnership. What's also interesting, I was at SECO, a mobile home park conference, this past few days, and someone was asking me, "How do you find partnerships?" And I'm like, "You just do it. Like, form a partnership with people and see how they are." Because I don't think a lot of people are like, "Oh, don't get married to someone." I don't think you can really know how someone is until you're in a deal with them and see how they work. Because everyone seems amazing ahead of time, and like for the most part, all my partners have been amazing people. It's just we didn't gel in the same way that like my partner Matthias and I currently do. So there's probably no shortcut there either. You just have to do it and see if you guys work well together. And if not, it's not a big deal. I mean, just make sure you can have some control over it, so like things don't go off the deep end. But there's nothing wrong with, I don't think there's anything wrong with getting into a partnership with someone who's not like your forever partner. You're not building something bigger. So it's trial and error, like a lot of things.
Yeah, I think that's a great point, because I think partnership is hard and a lot of people are nervous about it, but it's another part of taking action quicker, which you did by just going on mobilehomeparkstore.com, which again is just another indication that I say a lot, because again, I grew up as an investor before the internet, that you can still do things the old school way. This is still the internet, but it's a FSBO. I mean, and most people who are thinking, oh, I want to get a commercial asset, they're not thinking they can go on a FSBO site and just pick one up. But I still think you can do it. I still think you could probably find them, on Facebook Marketplace and things.
Yeah. And I know I know some people who do. There's a ton of different ways to find deals. And I mean, what works for me today wouldn't have worked as well for me before. But at the heart of it, it's just underwrite something and then make an offer and be able to stand by your numbers. Everything we underwrite, I'm submitting an offer on, and it's always lower, but I can always say why it's at this place. Everything we underwrite to today, we started raising capital last year, and so everything is based on investor returns, and we have a minimum threshold we have to hit in order to actually raise for something. So sure, I'll give a super low offer any day of the week, but I promise I'm trying to hit their number. It's just numbers are numbers, and I got to get people returns to close things. And not every deal's for us, and that's okay. And you just keep swinging the bat until you get something.
Yeah, but I think it helps everybody if you present an offer, even if they perceive it as a low ball, and you back it up as to why, then they can say they have an offer and they can leverage it against something else and say, hey, we have had an offer, it was too low. So everybody can kind of benefit. And I've always said that if you're going to, there's a difference between a low ball with no discussion of how you got there, because some people are just priced high, and then a low offer according to their list price that is supported by either data or, like you said, what you need the investor return to be. And there's no harm in presenting that. And especially in the commercial world, I think they're used to it when you're talking about, in the millions, you're coming in a million under. Sometimes that offer's fine.
Yeah. And I have a lot of broker friends. It's a very, I'm sure you can attest, a very relationship-driven industry. And, we joke, they're like, you're so low. And but at the same time, they're like, thank you for giving this, because sometimes
Yeah.
it is priced too high. The seller wants an unreasonable number, and it's just not moving. And at least they can take my offers and present them to the seller to kind of like
Yeah.
wake them up a little bit. And I'm probably not going to
Exactly.
get them, and that's okay.
But it's good. Again, that's building relationships. It's good for everybody involved, even if you don't win. And I think that's part of what people get wrong about real estate investing from the outside. They think it's like always competitive. I always think, for the most part, all of the good people in the business are collaborative. Of course, you could be up against two people in a deal, but then maybe you partner, just easier,
Yeah.
like you said. And I grew up thinking it was cooperative, and I still haven't changed my mind.
I don't like competing with people, because it's just it's no one's winning. And so exactly
Yeah.
like you said,
Yeah.
if someone's coming in, like, either I'll just be like, dude, go with them, that
Yeah.
sounds awesome.
Exactly.
Or hook me up, maybe we can do some kind of co-GP whatever partnership. Yeah, I like working with amazing people, and I have a great team. We like working with amazing people. So before, when I was newer, I used to think it was very competitive and it was me versus you, and I had terrible luck. But it's not luck, it's just I was doing it coming at it from the wrong angle. Now that I
Yeah.
do very collaborative, we're having wins all the time.
Yeah. Yeah. I've seen the difference myself, because I was a lawyer for a long time. And when I was a practicing lawyer, and even a little bit after, I was just like negotiating all day on everything. So I was way too hardcore, for real estate. I was negotiating life sentences, and then I come over, for one single family flip, and I'm acting crazy. Like, you have 1 hour to accept this offer. And that doesn't bridge good relationships long term. But I did do that. Occasionally it works, but it's not really what you're going to build your personal relationship scale over time on.
Yeah, probably everyone's like, who's the lawyer? What's this? 1 hour? Come on.
Yeah, then they all hate me. I'm curious to know though. So when you made that offer on the first one, and then you reached out to others for partners, due diligence on some assets is easier, but mobile home parks is pretty complicated when you're just getting into it, because there's a lot of things that people don't understand about it, depending about pads, what's own rent, and where the utilities are, who's responsible for everything. So how did you even figure out the due diligence on the first one? Or were you just like shooting from the hip? Price looks good, let's try to lock something up?
It was haphazard by far. I look back at the little due diligence I did, and it was
Yeah.
it was not much. I am a very much like, personally, it's like, let's get the thing done and figure it out as we go.
Yeah.
Thank God I have teammates, partners in our core WCG group who does all someone does all due diligence, and
Yeah.
she's so great at it, and it's amazing because it's not my skill set. But yeah, I mean, just got like a high level snapshot. Got the rent roll. I don't even know who I had a profit and loss at that point, to be honest.
Yeah.
But
Yeah.
So I do imperfect action all the time. That's what I'm good at, is just taking action, and then
Yeah.
figuring it out as I go. And it worked for a while. It still works now. It just works well because I'm taking the action, and I have partners who make sure that we're not actually missing things. So definitely my strength today is that I'm partnered with people better at things than I am. And I can stay good at 2 or 3 things, and just find the people who are amazing at what I'm just, details are not my thing.
Yeah. I'm with you. People can send me a 20-page PDF, and I call myself an asset hunter. I'm very focused on the asset. I'm not really tied into the spreadsheets, even though I run most of my life off of spreadsheets. I'm just really considering, because again, and this is just kind of a pump up of real estate as a whole. There's an asset there, there's land underneath it. And I'm looking at it just holistically. is this something I want to own? Is this something that's going to appreciate in value? And then for what you're talking about, is there already an existing business running on top of this land that I can make better? And most of the time with mobile home park, you can walk in, look in 1 second, like, I can improve this.
Yeah.
That's why it's available.
So, this one, we bought it. It had 10 of 36 lots occupied. And so I'm like,
oh, wow.
I don't know how I'm going to do this, but I know I have to increase the occupancy. I know we have to get homes in there. I have no idea how, but like, I have my blinders on. I have to figure that out. And so, that first year, I mean, it was ended 2019, COVID hits, everything's shutting down. And Legacy Homes, they sent out an email. They said, we'll finance 100% of these homes to community owners who have vacant pads, minimum 6. So I was like, yes, that's the power of the blinders. This is what I had been looking for. And so they said that we took action. My partner and I took action, bought 7 of them, had 2 people move their homes in like organically. And so we went from 10 of 36 to 19 of 36, refied, a little over a year later, maybe 14, 15 months later. And then like the value of the land doubled from what we paid. And I was like, oh, this is magic. Like, this is how you do it. Okay,
that's what that book
Let's
was
keep
telling
doing
me.
It. Yeah.
I think, but like you said, it's a very similar story. I've heard it in every single aspect and asset class. It's just like you get all the way down to like land flipping, and someone, puts land up for 1,000 and they get 3,000. They're like, wait, what if I did this at scale? It's the same mobile home park. It's like all we did was just change the way it was operating and make a couple smart moves, because what you're trying to do when you're buying mobile home parks, at least at the scale you were then, is you're trying to find the mom and pop owner who's tired and doesn't enjoy the operation and probably has just been letting everyone get away with everything. And again, I've always said, I think the people at the park, just like when you're taking over an apartment building that someone has just kind of not done anything, they're not adverse to rent raises as long as they get better service. So if you come in and you're super organized, you're kind of just making a better community overall. Have you found that across your 19 mobile home park turnovers? Because I know you like value add, that you can really raise everybody in there. Maybe a couple people leave because they like it dirt cheap, but you're going to make a better community out of it.
Absolutely. And I wasn't always thinking like this, but I definitely do now, especially after reading like, Hormozy and people like that, to lead with value. So like in one of our parks in Sumter, South Carolina, we closed this year. Yes, we're going up on rent. Even, rent is way lower than market. It's probably, I think we bought it at $225, where market was like $450, roughly like that, right? So for lot rent. What we're doing, like, yes, we're going up on the rent, but we are putting 100,000, 98,000 something into new paved roads. So it let's
that's a big
make
deal.
this a nicer. Yeah. Oh yeah. But yeah, definitely we're in the mindset of leading with value.
Yeah. And in order to do that, and in order to get the scale of profits that you are, I'm assuming that you're trying to find these mom and pops, because again, your ultimate sellout on mobile home parks, if you choose to sell, is operationalizing either a very large one or putting together a bunch of them to sell to, a REIT or someone who wants to buy something that's fully operational. But you like the value add part of it, so you can get good deals, but they do come with spending some money to upgrade and help everybody and see who's going to like it and who's not, right?
Yeah, definitely. And we do, when we take over a park, we make sure to put out surveys, like tell us what you want, tell us what the value is. We listen to people. And then so in terms of buying from mom and pops, though, we'll buy from anyone. We don't go off market. So I'm the acquisition lead. I don't go off market. I want to talk to someone who's ready to sell. So I'm working with brokers, sometimes mom and pop owners, and sometimes, more sophisticated, or, how they run their operations more sophisticated. And either works. I mean, it's still everything we underwrite. It's all based on the, a 5 to 7 year business plan. So it's, we're not going to get in there and jack up rents day one. It's like, okay, let's go low and slow on rent increases to get to market. We're not going to underwrite, we're going to bring in 50 homes in year one because we've been in the game long enough. We know that's unreasonable. So it's, 3 to 5 to 6 homes a year we'll underwrite. Even if there's, 50 pads to occupy. Yeah, we probably won't get to all those pads by the end of year 5. We might, but we don't want to underwrite that. Like if the deal requires us to do things that are unreasonable, it's not a good deal. It's not something that we take down.
Yeah. I like the strategy because I think, if you're just focused on what is, on the market commercially, it's going to drastically cut down the due diligence that you have to do kind of on your own, getting the mom and pops who pull out the notebook of paper, with the rent roll on it. You at least already have a broker in the middle. And then, like you said, a lot of times they start off with a super high price because it's not like you put a mobile home on Zillow and have, 19 showings the first day. So there is that kind of give and take where the broker and you can say, we all know that you're like 2 million high, right? And he says, yeah, get us something and that can help. And sometimes you have to wait them out, right? You get an offer in and maybe they come back a couple months later when they realize nobody else is sniffing around that mobile home park.
That's how we get everything. It's in the follow-up, I'm very good at hearing no and then saying, man, I hope you really get that number you're looking for. You mind if I call you in a couple months and then we'll see? And then call in a couple months and then, do you have any updated financials? I promise I'd try and get everyone their number. So if maybe in 2 months, like the NOI has increased by $100,000, that's substantial. We closed something in another deal in Sumter just this past month, I believe. And it was, we had been going for it for a while since I want to say last year. And there's just so much vacancy. It just didn't make sense to get to their price. And then, I talked to the broker about deals. We're friends, I'm friends with it. I have good communication with everyone. So I think we were talking about another deal and he said, oh, by the way, they did a lot of work to this one. The occupancy is way higher. The NOI is way higher. I said, sweet. Send us over numbers so we can run it and see, how we can close the gap. And I want to say we were probably at like 2.5 million before, and we closed at now we closed at like 3.35 because they did all this work and it made sense. The banks came in, they said, we'll give you this much leverage. And so it's definitely the follow-up game. And really, I hope everyone gets the price that they're looking for. When I sell, trust me, it's going to be a high number. And whether or not it sells at that and trades at that, who knows? But for all the new people who are like, this is way too much. It's like, yeah, of course, you want too much when you're listing too. So like, you just play the game,
Hey, it's Jonathan. I hope you're enjoying this episode with Tim Woodbridge. And if you're interested in mobile home park syndications and what WCG can do for you, go to WCGinvestments.com. In the top right, you'll see a big yellow button that says book a call. That's just an informative call. You can check it out, see what they're all about, or you can download a free investor's guide on the homepage. And in the show notes at the end, you'll see that there's a free ebook. Let's get back to the show with Tim. Yeah. And also, as going back to what we were saying about relationships before, if you're the person who presents the offer and nicely says, yeah, it's no problem if you don't want it now, I'll check back in a couple months. If you're that person, you're going to get a call back. You're going to talk to the broker. The owner's going to say, hey, they made a nice presentation. If you're the guy who says, like, my childhood strategy, like this offer is good, for 2 hours on a mobile home park, they're just not going to want to deal with you later. They'll begrudgingly sell to someone for less money, even if you're more qualified, just because you're annoying them.
Yeah. That's I've done that before too. It took me a while because I used to be like, oh, they want that price. Especially, I bought in 2019 into 2019 for my first one, and then 2020, 21, 22, everyone was going crazy and giving crazy prices. And so I was like, that's BS. There's no way. That's crazy. That's not what that's worth.
And then they get it.
Yeah, then they get it. Yeah, exactly. Yeah. So I showed my ass, as it were. I had to realize it's the game, and things trade for what they trade for.
You have to understand the market and who's in it. And at that time, there was a lot of inexperienced operators overpaying. And you just have to say, like, hey, good for them. But yeah, I've been there too, just on single family, saying like, oh, you're never going to get that. And then they get 100,000 more. And I'm like, I mean, I feel bad for the person who got it, but good luck, good job, seller. Hold out for what you want.
Yeah.
Yeah, exactly. So in terms of like, one thing I like to address with mobile home park investors is there's just this weird, I guess, like, people think that all mobile home parks are, quote, trailer parks and hard to deal with, and the residents are difficult. Hopefully I've had enough episodes where people have debunked that. But was that something that you had to conquer, or were you just like all in on this asset because it looks like a good business? What I found from talking to others, and I wanted to get your opinion, obviously you guys own 19, it's like these are very well-run communities. A lot of people stay for a long time, and there's a lot of different uses for them now than there were then, and why people go to them.
Absolutely. And what I've realized from the beginning is people are people. Everyone deserves to be treated with respect. Just because someone's living in a mobile home park, good for them. There's such a big need for affordable housing. So I and my team, we meet people where they're at. We don't have unrealistic expectations. I don't think that I'm going to walk into one of my parks and be like, why isn't this, A plus community? It's like, no, it's just not how it is. And it's okay. Yes. In terms of, we have had to talk to more investors about, look, yes, I know there's stigma. We know that. We're working to make every park we own better than when we found it. And, think what you want. It produces cash flow. It produces cash flow very well. People, tenants are very sticky. We're able to treat our investors very, very well and give them, we do like 3 months after close is when we start distributions, and we are going to start doing monthly distributions to investors because they cash flow super well. So it's like, I tell people, like, you have to meet people where they're at. If you're giving us $50,000, $100,000, and expecting to be, invested in A-class apartments, like that's not what it is. But if you're expecting to put your $100,000 to work in something that has meaning, that is providing affordable housing, I think we've run the numbers. For every $100,000, it houses roughly 10 people. So if you want to put your money to work in something that cash flows, that gets you great year one depreciation tax savings, and actually has meaning to it. It's not just, okay, here I'm going to get returns. It's like, no, you're going to provide affordable housing to 10 people for every $100,000 you invest. Like, let's make the world a little bit better together.
Yeah, and especially now. I mean, again, like you're saying, where people live is their choice. And look, it's so crazy because like what you look at, a lot of mobile homes look unbelievable. I mean, they just look like ranches a lot of the time. So people's thing of thinking it's like something you pull behind a car, those days are over. A lot of these just look like your standard ranch in a regular area. It just happens to be, on a pad and doesn't have a basement usually. So it's just a different type of viewpoint. And I think the more you see it, or I don't know, do any of your investors come take a tour of any of the parks and then they're like, oh, okay, this is different than what I thought. It may not be perfect, but like, it's not what I originally thought it was.
Yeah. We've definitely had people come through, and that's exactly what it is. It's like, oh, this is a neighborhood. This isn't some, whatever I thought it was in my head. This isn't, this is, it's just a neighborhood. It's, you go to some of our communities and it's like, oh, some of our investors are like, I'd live here. Yeah. It's just a community.
Yeah, I mean, I think Barbara Corcoran bought a mobile home in Malibu. Of course, it's like $3 million, but I mean, it's a mobile home. I remember when I moved to Florida about 20 years ago. I lived in Florida 14 years, and I had known about mobile home parks growing up in New York. But when I got to Florida, I saw some, and I was like, well, I mean, it doesn't look that much different than the neighborhood that's a little bit here. It's just part of the neighborhood and very well run. They were in good shape, and that was the first time I kind of remember thinking like, it's not what I thought it was.
And as owners, it's on us to work on that stigma to get, make them nicer places. Don't run them like, a jerk, really. Run them, make them better. They'll cash flow well. You have to put some money, or you should put some money into them because they'll still cash flow very well. Like what we do, we will raise money for whatever CapEx ahead of time and just make them nicer places to live. Everyone needs some place to live. And I mean, the more and more, the more I'm alive, the more I see the need for affordable housing. And there's so many things that miss the mark on it. And that's why just the more I do this, the more I'm bullish on mobile home parks and just helping provide for the need.
Yeah, I mean, and it's a much quicker move in for people, and there's less responsibility from the owner of a mobile home park, if it's a pad situation. So you're not, you're kind of protected from a lot of things. It's just a very smart business when you start to unpack it and understand how it actually works and, what you're responsible for. And sure, could there be big costs, but that's part of the due diligence, understanding, where the electric is, where the plumbing is, what's supplied, how it's supplied, because that's where you can lose money. But once at this level where you guys are at, you kind of know what to look for when you're going in, and what you can fix with plumbing, how much it's going to cost, and how much it's going to upgrade the value long term.
Yeah, we are very, very thorough with due diligence. Because that's it. It is a business. It's real estate, but it's a business. So over the years, we've developed a lot of best practices to make sure that, no one's losing money, to make sure that what we project, I mean, we're very conservative in our projections, but to make sure what we're projecting is something that we can actually execute on. Because, I mean, it's easy to say this deal is great in a spreadsheet, but we're here for a long time.
Well, you just change a number and it looks great.
Change that cap rate by half a point, and all of a sudden.
I'm curious to know what, in terms of what you've seen, what are the things that people lose the most money on if they're not good with their due diligence? Is there one or two things where you say, like, we've caught it, but I can see people missing this, and that's going to be a big CapEx and then lost to the investors later?
Yeah, like you were saying, the water sewer situation, making sure that it's pretty solid and that you have some reserves for if there's any like black swan event happening. And then I will see people, newer people be like, okay, this is a big infill project. We're going to infill all these in this 1 year. And I'm like, maybe, but like, have you done it before? Because it's hard. It's a lot of work. And it's not that you can't do it. It's just, if you haven't really done it before, you probably it's probably unrealistic. So there are times when I'm like, nope, let me see your underwriting. Probably not going to happen operationally. So why don't you go easy on yourself? 3 to 5 homes a year, and then make that deal work.
I think that usually comes from an experience. And also that's what I always call the best case scenario. And as an investor, I never want to see the best case scenario, because you're likely, if you hit it, great, but show me what I can really expect. Worst case scenario, I'd like to see. And if worst case scenario looks okay, that seems like a great investment, especially when you trust the operator and say, if everything goes wrong, we're still going to make this. Maybe you don't get paid as much, but we're very confident we're going to do better. That's just a much better presentation, don't you think, now with all this experience presenting to investors, that kind of more realistic point of view, instead of saying how we're going to hit a home run, because probably not.
Absolutely. And I love worst case scenarios, because it's like, okay, we don't underwrite any refis into our numbers. We want to make sure the deal stands on its own. If we refi at year 2, get everyone their money back, all of a sudden your IRR is way higher. But I've seen people who they'll put that refi in year 2, and they're so confident in it. And I'm like, maybe, but what if you put that in your
rates are higher?
Exactly. It's how many people in 21, 22 underwrote a refi, and 2 years later, and all of a sudden, instead of 3% or 4%, it's 6, 7, 8%, and then they can't refi.
Yeah, well,
It's just like,
they're getting
yeah,
called due. Yeah. I mean, debt's always a big part of what I look at as an LP investor. And like you said, I want to see that it stands on its own. I don't really, as a LP, I'm not looking forward to the refi. I mean, I am, but I'm also know that I'm committing the money for a longish term. So I'm kind of just like out of the mix. And if I'm getting, distributions, I'm not really worried about it. I just figure like the timing will come and you'll do well.
yeah, yeah. And that's super important. So yeah, if the worst case scenario, I mean, obviously, nothing. Who knows what happens? But our worst case scenario is usually like no rent increases. The cap rate gets a little bit higher and all that stuff. If we can still make it work, yeah, it's not going to be a home run. But if the worst case scenario is a viable deal, those are the deals we want to do. We're not pie in the sky. We're we've done it enough. We're realists. We know what can be done. All of our OMs and projections say, close to worst case / middle of the road scenarios. Sure, we know that we can probably do better, but I'd rather underpromise and overdeliver than the other way around.
Yeah, especially if you're talking about the way that you were about the one where there was only 10 pads at the time and you got it to 19 in a year. Just that on itself, if you get a +9 on people in there, your valuation could honestly double in that type of market. And I think it did for that first one.
It did, but yeah, we don't underwrite any of that stuff because that was oh man, I worked really hard to get that done. And not saying it can't be done. We have teams and stuff now, but if we underwrite every deal to be the home run, there's going to be one that's not, and then we're going to be doing a disservice to our LPs, and that's not the place we want to be in.
Yeah. Let's talk geography a little bit. Are you trying to stay close to South Carolina? Because I know that's where you are with all of your mobile home parks, or have you branched out further from that kind of South area?
We like the Southeast. So we have one in Oklahoma City that someone brought to us, and I love that park. But like everything else we own in the Carolinas, Georgia, Virginia, looking in Alabama and Tennessee right now. The Southeast is a great place to buy mobile home parks and run them and make them a little bit nicer. So like everyone's winning. Sure, I've thought about branching out, but there's no need. I know the Southeast. We're good at the Southeast, so that's where we're looking.
Yeah, and I found that even across any asset classes, the Southeast generally performs pretty specific. So you know what you're going to get in Georgia and the Carolinas. You're going to be pretty close. The markets run pretty much the same for a lot of asset classes. And I think that helps. But like you said, then you go try the Midwest, little bit of a different formula and a different weather pattern to adjust to as well in terms of your, mechanicals and everything.
Yeah, we don't do snow down here, so I don't need to be putting heat tape on pipes or anything like that. I mean, please.
Yeah, that's a better thing. So if somebody wanted to get into mobile home parks and they're new to it, what would you suggest the best way for them to kind of sniff around so they don't make any mistakes on the many guru classes that might be out there on saying how easy it is?
So easy.
Simple, no big deal.
Yeah, it's passive, right? It's mailbox money. Oh, geez.
Yeah.
There's a lot of good people. And there's a lot of not as great. I mean, you can't go wrong with Frank Rolfe's program. You can't go wrong with my friend Ryan Naris and Michael Panzolini. They put together a really good mentorship program. If you're new, you're probably going to make some mistakes, and that's okay. Just try not to make them too big. If you want, like I made a free course for like mobile home park acquisition. I haven't done like operations or anything like that. So by all means, send me an email, ask for the mobile home park acquisition thing, and I'll just send it to you. It can, definitely help people kind of get started and things to look for and stuff like that. And yeah, just
Yeah.
always be, a learner, always be learning. I'm always learning something new. Just when I think I know everything there is to know about the business, I'm like, oh, okay, that's new, that's exciting, that's interesting.
Yeah. Yeah. And is there I guess a pad count that's too big for you? Are you trying to focus on numbers when you're looking at parks, or is it a price point?
So there's too small for me now. And so we don't really want to deal with something less than $3 million because we're syndicating and raising on all these things,
Yeah.
and
Yeah.
that's like the sweet spot to make sure everyone's getting paid for the work that they're doing. In terms of too big, not really, man. Yeah, I know that's weird to say. It's newish for me to say, to be honest.
Yeah.
But
Yeah.
we're going after a 800 plus pad portfolio right now.
Oh, wow. Yeah. Yeah.
Yeah, so
Oh, but
we have the
it's not
capacity.
one solitary park.
No, that'd be pretty sweet though. No, it's a bunch of parts
I
in the
was
same
thinking like
town.
that's a big one.
Yeah, that's a town right there.
Yeah.
So
Yeah.
no, I mean
Uh,
it's all about investor returns and like the ability to raise. And we've partnered with some people bigger than us, so we have the ability to raise. And it just has to make sense for our investors, really. But we're hungry, man. I love this asset class. I super nerd out on it, so I'm ready to
Yeah.
take more and more down.
Yeah. Well, and I know you own a 26 space RV park. What's the difference for the listeners between your mobile home parks and an RV park? I think I know, but they may be thinking about that from the beginning.
Yeah, so our RV park, it's small and there's mostly people who are long term. So it's similar in a lot of ways.
Yeah, that's
Um,
interesting. Yeah.
but what and that's like if we go for other RV parks, it's going to be long term. We like the very steady tenant base. Um, what a lot of friends of mine who do RV parks, it's a business, right? You've got people coming and
Yeah.
going. And so you're making a lot more money and you have a lot more expenses. Sure, I know a lot of people who do super well on nice bigger RV parks, but you're running it from day one as a business. So when I first got
Yeah.
into mobile home parks, I was like, this is real estate. Now we run things as a business because we're big enough and we have different verticals. But if you think you're going to get into a big or a semi-big RV park and just have it be mailbox money or passive, I mean, you're a business owner.
Yeah. Yeah. Are the contemporary RV parks are more like modified traveling glamping or something? I feel like that's what my thought of it is. They're pulling up and, everyone, like every person who's 20 to 35 is traveling, in a camper all over, and they're staying at RV parks.
Yeah, it is. It is
Yeah.
that nice glamping and that. I mean, you make money. They make money for sure. It's just, yeah,
Yeah.
it is a business.
Yeah. Before we hop off, I think I've always thought with both of these business, obviously RV, but certainly with mobile home park, how you operationalize it is so important. And that comes from seeing how they're doing it in the beginning, who's on site, who's been doing stuff. But it really takes a lot to make sure, because that's what makes it a better money maker is once you have the operations, as you were saying, running like a business, because it probably wasn't before or not as well.
Correct. So the thing that was the game changer for our business is I met my partner Matthias, who was the COO of a car auto parts manufacturing in the upstate in Spartanburg, South Carolina. And so we were talking about partnerships earlier. I had partnered with a lot of different people and JVs and stuff like that, and a lot of like similar. We're both good at the same thing. When I
Yeah.
partnered with Matthias, he does spreadsheets well. He does details well. He was the
Yeah.
COO, so he like man, it's just not. I can underwrite, just not well, and I don't like doing it. So when he first came and he's like, hey, I want to buy these 4 mobile home parks up in the upstate. I know how good the market is. I'm like, okay. I don't see it. I don't see like getting close to their price. but let's see what you can do. And I was at like 3.2. Then I talked to the broker, and he's like, yeah, we could probably get it done for 3.85. And I'm like, here you go, Matthias. This is what he says. And he comes back with, the whole full pro forma and why that's a great deal. And we closed it. And let's see, when we bought it, the NOI was like $250,000. And in the past year, we're at $500,000. So
wow.
That's the power of having someone amazing in operations. It was not great when I was doing it. I can do it, but not nearly as well. And just the systems that he has set up, and oh my gosh, it has rocketed us ahead. But yeah, everything's very business now, right? So it's okay. He's got the operations. I got the acquisitions. Our other partners, Vinny and Marianne Carius, they do a lot of the investor relations stuff. And so, now thinking about different verticals of the business, I mean, we have in-house property management. We're forming like an acquisition company, and just like everything that kind of feeds into the whole. And so it's an interesting evolution from when I started. I was like, oh, I want to buy this. It's going to make me rich. I don't know how, but that's what I'm going to do. And then just continuing and just the mindset shift. And now it's not, okay, I'm going to buy this, and it's going to be easy. It's like, no, we have all the right people in the right seats. And so let's continue building this business around providing affordable housing to people. And we're doing it, man.
Yeah. Awesome. Well, I really appreciate it. It's been a great episode, and another good learner for mobile home parks. Is the best place for people to find information about you guys at WCGinvestments.com?
Yes, sir. Any new people who I said, send me an email for that free resource. It's tim@WCGinvestments.com. So, but I love helping new people.
Yeah, super. And I know I'm going to have Matthias on. I just didn't want to have you guys on within the same month. So we'll get him out about 3 to 5 months and get him on the show too. But yeah, I really appreciate the time. Look forward to staying in touch.
Love it. Thank you again for having me on the show.
Absolutely. That was Tim Woodbridge. He's the co-founder of WCGinvestments.com. I'm Jonathan Green. We'll see you next episode. Thanks for sticking around to the end so you can get a preview of who's coming up on episode 292 of Zen and the Art of Real Estate Investing. And it's Joe Downs of Belrose Group. And Belrose Group is an innovator in the self-storage field. So whenever we have a self-storage show, you might think you've heard it before, but it's always different. Joe's background is different. We're talking passive investment, active investment, and for Belrose, innovative development, unlocking potential, maximizing value, and building the future of storage. Next episode with Joe Downs.